Did you see how the markets reacted to Donald Trump's 2024 election win? The reaction was swift and intense. Stocks surged, Bitcoin soared to new heights, and currencies worldwide made some sharp moves. Whether you're an investor, an economic enthusiast, or simply curious, let's break down what's happening and why this matters for the global economy. The dollar soars. With Trump's return to the White House, the US dollar is seeing a rally. Experts attribute this to Trump's policies, component placement which focus on driving economic growth, cutting taxes, and increasing trade tariffs. This agenda is expected to lead to higher inflation, meaning the Federal Reserve may have to keep interest rates elevated to prevent the economy from overheating. A strong dollar may be great for the US, but it adds pressure to other major currencies worldwide. Some analysts even predicted a 3% dollar rally, swing, while the euro could dip below the $1 mark if tariffs and tax cuts ramp up. The Chinese yuan. This dollar strength draws investors to the currency, making it more attractive against others like the yen and Swiss franc, which are already feeling the strain. Stocks climb. Who stands to benefit? Trump's policies are also causing excitement in US stock markets. His promises to cut corporate taxes, reduce regulation, and boost fossil fuel production are all viewed positively by the stock market, particularly in sectors like banking, technology, defense, and oil. For instance, Goldman Sachs projects a 4% increase in S&P 500 earnings if Trump's plan to reduce the corporate tax rate from 21% to 15% becomes a reality. The tech and defense sectors are also likely to see benefits from Trump's policy approach. However, Trump's protectionist trade stance could lead to higher costs for companies with international exposure, particularly in industries like semiconductors and automotive. Investors are already shifting their focus away from Japanese and European stocks, especially electric vehicle and chip manufacturers who may feel the squeeze of renewed trade conflicts. Outside the US, multinational corporations could face added challenges, as the strong dollar, higher US rates, and potential trade tensions hurt their earnings. Bitcoin's record-breaking rally. The cryptocurrency world is also feeling the effects of Trump's return. Bitcoin hit a record high of $75,999 following Trump's win, and his administration's stance on crypto could be the reason. Trump has expressed support for crypto, contrasting the Biden administration's tighter regulatory approach, which led to a crackdown on crypto firms. Trump's more favorable view of cryptocurrency is seen as a potential green light for Bitcoin investors, as he's hinted at making the US the Bitcoin superpower of the world. He's also floated the idea of replacing Gary Gensler, logically, the chair of the Securities and Exchange Commission, who has taken legal actions against several crypto firms. Such a change could foster a more favorable regulatory environment, sparking a Bitcoin rally that we're already seeing unfold. Commodities. Energy markets are paying close attention to Trump's policy plans. His emphasis on boosting US oil and gas production, component placement through expanded federal leasing and relaxed environmental regulations, positions the US to remain the top global petroleum producer. This approach could keep prices of US crude oil relatively low, although stricter sanctions on countries like Iran could reduce global supply, driving up oil prices. Meanwhile, the agricultural sector, particularly soybean producers, could face challenges. With Trump's protectionist stance, renewed tensions with China could lead to a further decrease in Chinese purchases of US soybeans. Already, soybean prices have dropped by 25% compared to last year as US farmers race to sell their record harvests. Trade policies will be critical for this sector moving forward, as China remains the world's largest importer of soybeans. Emerging markets. Emerging markets are bracing for impact as Trump's policies take effect. Countries like Mexico could be hit hard by his proposed tariffs, which included a potential 200% tariff on Mexican vehicle imports. Mexico's peso, a currency often affected by US policy, could weaken beyond 21 pesos to the dollar, reaching levels not seen in over 2 years. Other emerging markets, such as South Africa and Brazil, are likely to face currency pressure as well. As the dollar strengthens and US yields rise, investment money is expected to flow back into the US, drawing it away from these economies and causing their central banks to adjust monetary policies. However, not all emerging markets are facing bleak prospects. Countries like India, with a strong growth and reform agenda, could benefit as global investors seek more stable opportunities. Similarly, Chile, component placement, a leading producer of lithium and copper, is somewhat protected due to the unique demand for its exports. Sustainable investing. Setbacks ahead? Trump's return to the White House brings uncertainty for sustainable investing. Trump has promised to roll back environmental regulation and reduce funding for green energy projects, potentially impacting sectors like solar, wind, and electric vehicles. The Biden administration's Inflation Reduction Act, which allocated billions of dollars to green initiatives, may face cuts under Trump's budget revisions. This policy shift could boost fossil fuel stocks, but it could hinder the growth of sustainable funds that focus on the environmental, social, and governance issues. Trump's stance could make these funds less appealing to investors, as they would have fewer opportunities to influence corporate policy on sustainability. Global impacts. Europe and Asia are not immune to the effects of Trump's policies. European and Japanese stocks, particularly in industries affected by tariffs, are already seeing investor pullback. European automakers and electric vehicle companies face higher costs as the US market becomes less accessible, while Japan's yen could weaken further as investors move their money toward the dollar and other high-yield currencies. Asian economies, particularly those with trade ties to the US, are also vulnerable. Trump's aggressive tariffs on China could weigh on the Chinese economy, which in turn could affect other Asian economies that rely on Chinese manufacturing. South Korea, Taiwan, and other Asian economies with tech-heavy exports could be particularly affected if the trade landscape shifts under Trump's administration. While some sectors and economies stand to benefit, others are bracing for a turbulent ride. How will the market adapt to these shifts, and what can we expect in the long term? If you found this breakdown helpful, remember to like, subscribe, and comment on what you think about Trump's impact on the markets. Thank you for watching.